Futures point to a flat open on Wall Street as Dow component Alcoa kicks off earnings season after the close. German Chancellor Merkel and French President Sarkozy meet in Berlin to further discuss deepening concerns around the Eurozone debt crisis. I'm Jill Malandrino, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. Welcome to a very busy week as Alcoa kicks off earnings season after the close today. We have the CES conference in Vegas, the JP Morgan Healthcare Conference, and the Detroit Auto Show. Merkel and Sarkozy are all over the tape today, and Thursday is the Spanish and Italian debt auction. Good luck this week.
Right, so there's nothing to look at, no headlines to watch, no events that take place, so trading should be real easy. Well, with all that said, we're still trading very constructive. Last week, even though Tuesday was really all the games we saw for the week, every single day there was different action in different sectors, and I still think the market's acting very healthy. So if you take a quick look at the chart of the S&P, you'll see we're still set up for higher prices. If you look here at the nature of this move, you had your low in October, your low in November, your low in December, so these are all higher lows. Then we broke above this mini downtrend during Christmas time, and now we're still set up for higher prices. If we can get some good earnings coming in to go along with the U.S. data that we've been seeing, we should break above 1284. Then you have 1292, and we can continue. Let's hope that Europe doesn't just rain on our parade here.
Right, yeah, there's a lot of headlines to look at for this week, but let's move into the sector as we talk about healthcare. The JP Morgan conference, one of the most important broker conferences, is this Monday through Thursday. A lot of companies tend to pre-announce financials at this particular conference, especially the biotech names. So we're going to kick this one off with Amgen. It's been a solid performer over the past 5 years, consistently beating on EPS and revenue.
I think Amgen goes with the whole thesis is that people want names they know, they want mega cap, they want liquidity, they want a dividend. And Amgen last year came on our radar towards the end of the year because it was starting to act much better. So if you look here at the chart of Amgen, you will see that the stock broke above this multi-month channel, right in early December, and that put it on the map. And from there, you've had a nice move. And since then, it's been consolidating near the highs. It's above all these moving averages. I would say be a little careful because this is a big move. But if it starts to get above this high here, you see some good news out of this conference above 65.19. You could see a momentum trade to take this stock to new highs.
And all the times that the stocks are reporting at the conferences are in Pacific time. Again, this is in California. This particular name at 10 a.m. this morning. Moving on to Celgene, which is going to speak at 8 a.m. It's reached some really nice new highs last week. Kramer thinks that terrific news is going to come out of this conference regarding the stock.
Well, that would be good. And with these type of stocks, they're very news driven. So you have to really know your risk. If you don't have a big risk tolerance, if you're in these stocks longs, make sure you have some puts. Make sure you have some type of hedge because these things could reward you, but they could also put you in the penalty box. So if you look here at Celgene, you will see stock looks pretty good. You did have a nice move above this 64 area, and above this 64 area, it had I would say it moved to almost 70, and from here, you had a small ascending channel that broke to the downside, no big deal. But I would say if you're in this, and you're trading it intraday, make sure you're in it and put a stop around 66. I do think with some more time, and if we do get that good news, it could eclipse these highs, and then there'll be more gains tacked on right there.
Rounding off the biotechs with Auxilium, this company going to speak at 2 p.m. Pacific time on Thursday. They have, insiders bought 2.16% of the float, over 41 million shares, and this is a nice short squeeze candidate as well. So if we get some good news coming out of here, this stock could go for a run.
Yeah, that's a big percentage of the float. So if obviously they might know something or they just want to control the stock, that could have a big short interest. So if good news comes in, it's off to the races. If you look here now, it did have a nice size move, so you got to be a bit careful. So look at the chart here on this AUXL, and you will see that you had a nice move from below 15 all the way above 20. Don't love the fact that it sold on the first day of the year, but I think it was just very extended, no big deal, came in, held a higher moving average. I'd like to see it get back above this 20 area, or at least hold this technically, hold above 1885, and I do think you could build a new base for some good news that could come out Thursday, and then it could go higher. But if it doesn't come out with any good news, I do think that it could be prone to a little bit of a pullback back to this moving average around 1738.
Moving along to Dow component Pfizer, we've spoken a lot about this name with David Peltier of stocks under 10. We've also seen a lot of analyst revisions over the past 3 months taking numbers up as some think that they are going to spin off its animal healthcare business, which would be positive for the stock.
I do think Pfizer is more like, not saying in the Amgen category, but something everyone knows.
Right.
You have the dividend and a little bit more safety there. Stock just had an enormous move, so I wouldn't chase this here. If you look at the chart of Pfizer, there were definitely some spots to buy it. If you look, at the low here in November, it came up quickly, consolidated. Really, the buy price would have been right around this 20, and I think we've spoken about it a few times. I don't remember the exact price. You had another move up, and now it's trying to go sideways again. I think the longer it goes sideways up here and builds a new base, a new level of commitment at these higher prices, I do think you could take out the 22, but I would only be in a tier 1, and if you're not committed, watch this low here of around 21.
And rounding out the healthcare space with Bristol Myers, as we said, going into the conference, you'll see a lot of great announcements going into it. It announced yesterday that its intention to acquire Kcks, which is a hepatitis C drug maker, for $2.5 billion, as that's a space that's heating up.
Yeah, a lot of people, their eyebrows lifted when they saw that news. Wow, that's the whole thing with some of these biotechs. The reward is great, and obviously there's risk, but if you find one that these big guys want, you could get massively paid.
It was 163% premium, which, I mean, obviously lends to the fact that this is a hot space within the healthcare, but, I mean, that was a huge premium.
And I do know people that were trying to short this one, so just be careful when you're shorting some of these healthcare or biotech stocks, because you can get crushed on a takeover like this. So if something's not going down, sometimes it doesn't go down for a reason. But if you look at Bristol Myers, you will see in the chart, it looks pretty good. It had a nice big move, a little bit of a faulty move lower, but at this particular point, see how the market handles this takeover. I would say as long as it could stay above this level here, above, just say, what is this, around 33 and go sideways, I think it could build a new level and continue. But a little bit of a correction, it could hit this 50-day moving average. So here are your two levels of support for Bristol Myers. Let's see how the street likes what they just did with this acquisition.
Okay, so for those of you trading healthcare, pay attention to the tape. We're going to see a lot of headlines this week. We're going to jump to a quick commercial, and when we come back, we go into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We jump into the trenches with the big tech cap names. Not healthcare.
Just got over that one.
So we have the CES show in Vegas this week. We're going to see a lot of headlines come out with that. Let's kick it off with Microsoft. Barron's is very positive. They think that we're going to see some nice announcements come out of the big cap name. And they really have to make some sort of move because they kind of fell off the wagon with Apple and RIM really capturing that smartphone market over the past 3 to 4 years. So hopefully we'll see some nice presentations out of this name.
Well, the street was definitely anticipating something positive coming out because last week's move in Microsoft, I haven't seen a move like that in a long time in Mr. Softy. I was actually on Bloomberg and I called it frisky. Everyone's like, we haven't heard of Microsoft being frisky. Well, look at the chart here of Microsoft and you will see some friskiness. Here you go. Look at when this stock broke this recent downtrend above, what was this, about 26. From 26, it beelined right to 28. These are 4 up days in a row, which takes us back to this old resistance here back from July, so you could see a little bit of a rest. So I wouldn't be just chasing Microsoft because they could sell the news of the CES, but if it pulls back and it could hold above 27 or it could hold above 27, 24, if you go to the monthly chart, I do think you could see a move, at least to this 31 area, and I would even go on the books of saying it could test this level, which is above 35 at some point towards the end of the year.
Moving along to Oracle, this stock got hit after a poor quarter in November. They missed on EPS. They also missed on revenue. So at this point, do shares look cheap? Could the product potentially come back?
I think this is something that's in the penalty box and needs time. It was the first time they missed in a long time. You had a huge gap down that hurt. Actually, that gave us a good opportunity. I remember during Christmas, that miss on the earnings gave us a Bible dip, which was the day after that, December 20th gap and go. But anyway, you look at the chart here, you have a low to trade against. So if you come back to Oracle and you look here, you will see this was the low that was put in on that day. It matched the August low. And now it's been trying to get into this gap, which, for a trader, it's a decent trade. For an investor, you have to really hold it a while. It was downgraded today, so let's see how it holds this 26 area or if it could absorb the downgrade. I think for now, you could be in a tier 1 long term if you want to sit and you hold Oracle, if you're a big fund and you want to accumulate it. For a trader, I think the action is not there. You should avoid it.
Moving along to Intel, Barron's again positive on this name. They're expected to speak about their new chip called Ivy Bridge, and according to some early reviews, it's been really positive.
Well, Intel last year started to get a lot of respect. Every time they had those great earnings calls, you remember, it was always sold. Record earnings, sold. Last year that didn't happen. It gained some traction, it gained some respect. They even came out last quarter and it wasn't so great and it was absorbed. So if you look here at the chart, I think that the institutions want to stay with this one. They have a cheap valuation, they have a dividend. This has been big support. It came all the way back up. And sometimes when you come back to old highs, you do see a bit of resistance. So I would say, if it pulled back to the low 24s of this area, I would say, I'd rather you buy it there. But if it doesn't pull back and it starts to eclipse this 25.70 area, you're going to see a momentum move. But for these mega caps, it's hard to really get any juice in a big time momentum move, so just don't chase it.
Dell is looking to focus on their profit margins with creating more product out of China, which would significantly help the stock. And they're also expected to announce a new Ultrabook, according to industry insiders.
Dell, back in the day, this was one of the best stocks to trade. It paid a lot of different bills. But at this particular point, they've been trying to reinvent themselves. They've been trying to come up with a new product line. And it's been taking a lot of time. But with this thesis of the mega cap, with the thesis that people want names that have liquidity and that have a low PE and that can make a comeback story, this could be one for your portfolio, but small. Look at the chart here. I think traders might, grab some juice if they could see it start to trade. This was the first level to get above. I would say if it starts getting above 15.50 on any kind of good news or any excitement from the show, you could see a quick move to 16. And then I guess if they stay intact, then you have 16.50. This one's not really a trader. It's more of like, you want to buy it, you want something somewhat safe, and I think you put your stops in a 14.50.
Rounding it off with Cisco, the stock did not have the best year, and analysts, traders alike, it just wasn't that friendly, but they did a lot of cost cutting. They've streamlined a lot of their operations, and UBS thinks it could be one of their top 20 picks for 2012.
I like Cisco, and there's times that you have to trade in, and this is one of those times. They came up, they went above so many different obstacles last year. I like this tight pattern. I started looking at it last week. If you look here at Cisco, I think there's a tradable move for traders as well as it'll benefit investors that are in there if it can get above this 19. If the stock starts to clear this 19 with some volume, you're going to get a nice, quick, actionable trade to about 19.50, 19.60. I'm long some of this actually, and I'd like to see it break above 19. I'll add, and then I think you get a nice cash flow trade on top of if you've been an investor here or the last time it broke out above this 16.50.
So from the CES show, the three takeaways that you're going to want to look at is the consumer, technology trends, and the economy overall. So those are the three headlines that most of these companies are going to focus on. And also, what are these big tech names going to do with all that cash that they have? So we could see a lot of interesting headlines come out of this as well. Moving along to quick hits for some quick cash, let's kick it off with Apple.
Apple's been one of the best high beta tech stocks since that December 20th gap and go. It wasn't acting great for I would say a few weeks, but rightly so. The stocks had a big move. It had to absorb, Steve Jobs' death and then the 4S launch. But anyway, if you look here at the chart, I like it a lot. It was upgraded by Goldman, to 550. This was really the area to sink your teeth in above this 395. Yeah, remember you had that move to test this gap here. It consolidated another great cash flow trade above this 410, filled the gap, negating this island top, and now it's coming right into the old highs of about 427-ish. Usually that brings out some sellers because look at the size of the move in the past 2 weeks. So I wouldn't get aggressive here as a trader at the highs. I've been holding it since this area. I'm probably going to look to see how it acts around here if I need to sell some. And then I think with some sideways action, I would put very high probability that that high gets taken out and we could see at least 550 at some point this year in Apple, but it all depends on your time frame.
Moving along to Amazon, we told investors and traders to short this thing going into its last earnings print, and that was a call that paid off really nice for us, although this stock finished off Friday up 2.8%. So where are we looking now?
Well, it's all pricing and timing. So great trade to be short then, but then it's been so battered and bruised and oversold. And I drew this pattern for you guys, I think a week or so ago. You take a look at this descending channel. Stocks, high, lower high, lower high, another lower high. So you're talking about a huge move in Amazon all the way to the downside. So this descending channel typically breaks to the upside. You had that massive reversal, if you guys remember that day, going into the new year when Goldman downgraded it. It broke below the 170, came up. That's a day to take notice. Then finally, traders got some momentum and got paid as it cleared this downtrend. So that means shorts get squeezed and you can have a move. So above Friday's high of, I would say, 184.65. I think there's room here to about 190, 194 if you're actively trading. But then, Amazon's going to have a lot to prove as this technically, on a macro basis, is a little bit more broken than constructive.
Right. Same thing with Netflix. That stock couldn't get out of its own way last year, and it had a nice move last week as well.
This is why I hate it when people say you can't time the market. We say you have to. And last week we saw a nice tight pattern in Netflix. Short interest still through the roof. I'm like, let's put it on the radar. And then volume came in. It ignited above 75. Look at this move in Netflix. great action for the actionable trader who looks for these type of scenarios. This was the day it broke above this mini downtrend. It cleared this high, lower high, created a new trend. Then you had a nice trade on Friday too when it went above that high of about, what, 82. I talked about that on Bloomberg as well. And now the next level I'm going to be watching is to see how it handles this gap area. This is about 94. Okay, so at this particular point, I am still long Netflix. I'm probably going to sell into this area and then see how it handles it, because if it gets into the gap, you could see above 100, and if you're short in this thing, you're going to be a little bit toasted.
MGM held above that 1050 level last week, so are we taking a gamble on it and going in for more?
I think that it could continue above 1130, maybe get another 50 cents, but it's not that exciting, but it's a decent hold.
And finally, DMND was very active in the options market last week.
What kind of options were going off? Were they bullish options, or were the...
It was a fair mix because there was a lot of rolling positions, and it's just been so active and so whippy. But
Okay.
the unusual options activity trading multiple times over its average daily volume.
Oh, so that's good to hear, because this is one of those that's heavily shorted. It's gotten crushed as a tight pattern. So this one could be like a GMCR or a Netflix where you get that big cash flow move. So look here at the chart. You could see that big move. This stock was $100, gap down, went lower. Something exciting must have happened here, but then maybe it was a misfire. But now you have a tight little pattern here. I would say if this thing could start clearing this flag, so I would write down this right now, grab your pen, about 34.30 on some big volume. You could see a nice squeeze, and that would be a great trade for the active trader. So keep this one on your radar. It'll be on mine.
Yeah, this one's a tricky one because the float is at 49%. That's an astronomical number in terms of a short float. So got a lot of names to look at for some quick hits. Before we wrap up the call, I want to take a look at Alcoa. It kicks off their earnings season tonight after the close. Expectations are not high for this name at all. So is it already built into the chart?
I think last I looked at it, it was below 10. So typically they run Alcoa, they try and lift it into earnings, and then it comes off. So this time, maybe it's not expecting that much. If you look here at the chart, you will see, from where it was, what was this, last June? It was at 16, and it's come all the way down. It's below 10. I see a little pattern here that it tried to break above. This is somewhat of a downtrend right here, right? And now it's holding. I would say if someone put a gun to my head and said you have to be long or short Alcoa into tomorrow, I would be long Alcoa. I would not be short Alcoa.
I agree as well, because expectations are so poor that if this name even beats by a couple of pennies above analyst expectations, it's bid down so much that it's going to go along and take a ride. And again, just like anything else this week, headlines are going to be fast and furious. We have so much coming out of Europe. We have 3 different conferences we have to take a look at, including Healthcare, CES, the Detroit Auto Show. We have the all-important bond auction on Thursday. So like Scott said, nothing going on, right?
Nothing at all. So just go to sleep and be long. No, I'm kidding. Manage your positions. Know what you have. Know the headlines. There's action every day, both long and short. Learn how to time this market. Educate yourself. Come to these sites, because we put things on the table, but unless you learn what we're doing, you're never going to be able to have conviction in your ideas. So take our ideas, learn how to use them, and get conviction in your own.
And don't forget to catch Scott every day as he wraps up the charts for us. Thank you very much.
Have a great day trading.